let's get going. Then we have a corporate now joining us on the show. We have the management of JNK India Limited. Remember, the stock was in focus yesterday on the back of a big order win. Today, of course, it is not doing much, but if we get the 5-day chart, we'll be able to assess the impact on the stock. Deepak Bharuka, Chief Executive Officer and whole-time director at JNK India, is now joining us. Thank you for taking your time out. And first, let's talk about the big order that you informed the exchanges about. You have not given the exact quantum of order win, but you have said that it is in the range of 100 to 300 crores. It's an international order. Can you share some more details about this order? And because it's a big order win, the stock was soaring in trade yesterday. Tell us more about this.
Yeah, good morning, Sneh and Ashesha. So this order, we are pleased to inform that this order is the first export order for us in year 27. Of course, this marks an encouraging start for the year. And this is a critical win for us, considering this is first order for us for the ADNOC facility. And with the CC7, which is a global EPC company who has office in UAE. And this is the first incinerator project for the VCM application with some SCL recovery and anhydrous SCL system production. This is another project that enables JNK to reduce the environmental emission and support the sustainability. This, as we declared, this order size is in the range of 150 to 200 crore. And this win is really testimony for our international customers who have the faith in JNK's capability to provide the technological solutions.
Understood. Good to know that Mr. Bharuka also talked to us about what is the visibility on your overall order book on the back of this order. And now that you've won this large export order, which you said is the first in this category, any more visibility on orders within this space? Anything in the pipeline so far?
See, as we talk, we have, this year-end order book was 1961 crore, what we had, and this order will definitely increase our order backlog. This is the first order in this financial year, and our bid pipeline is really big, particularly in Africa, Russia, and West Asia. We have a lot of bidding which has happened, and we expect that some of these big projects to materialize in next 1 or 2 months time, and that outlook is quite healthy as far as bid pipeline is concerned.
Are export orders more margin accretive as compared to domestic orders? Can you throw some more light on that? And as a percentage of total revenue, how much do you generated from exports in the last year? And as a consequence of the big order win that you've now shared with us, what will the order book from exports look like going forward?
See, last 2 years, our order book was more, or the revenue was more coming from the domestic orders. Maybe 80+% was coming from the domestic orders. This year also, if you talk about the financial year, our revenue will be majorly from the domestic project. But if we talk about the order booking, we expect order booking to be more than 50% coming from the export orders. So whatever orders we book this year, the revenue will happen in the next year or year after that. So going forward, next year we see more of the revenue which will come from the export orders. And slowly we'll have an increase in the domestic order booking going forward to the 3rd and 4th quarter of this year.
The revenue was skewed more towards domestic orders in the previous quarter, but now that the trend is changing, I was asking you about export orders being more margin accretive, and consequently will we see more margin expansion going forward since the order book consists more of export orders than domestic orders?
See, typically we do not give the margins on the particular orders or order specific, but overall, if you see, margins will be more or less on the same line as the guidance we have given, which is around 14 to 15% EBITDA. In general, you are right, but then there are various geopolitical challenges we are having for these export orders. I will not say there will be much of the difference in the margin. We'll be able to deliver as per the guidance what we had given during our investor calls, which is around 14 to 15% EBITDA and revenue growth of around 25 to 30%.
So exactly, Mr. Bharuka, my next question to you was on your revenue growth guidance, this 25 to 30% revenue growth guidance that you've given for FY27. Talk to us about what are going to be some of the key drivers. I understand you're looking at the Dangote refinery and fertilizer as the next big opportunities for the company as well. What is going to be the contribution from all of these facets put together along with exports, and what is going to lead to this 25 to 30% growth in FY27?
Yeah, see, this revenue growth, what we have projected is based on the projects in hand. Definitely, I mean, we have not factored any of the new order book while giving the revenue growth. And as far as Dangote is concerned, it is still in the bidding phase. We are not in a position to declare anything to till we have some order win or some decision taken by our client. And if we at all we get any of these projects, definitely our growth percent, I mean, revenue will be better than 25-30% growth. We might reach if some of these orders clicks. As you know, these orders are the large orders, much bigger than what we are talking about. And this will have positive impact on the revenue. We may touch 40-50% revenue growth if at all some of these orders clicks in our favor.
Okay, so assuming that the new order kicks in, you're saying that 40-50% revenue growth for FY27 is a given. And if you receive some more order wins, some big new orders come up, then you could actually achieve more than 50 to 60%. Am I getting you right?
Yeah, you are getting it right, but still I consider it is more of a speculative. So we will not talk about something which is not in our hand. So 25 to 30% is based on what we have in our hand today.
Okay, sounds good, and that's quite a lofty guidance that you've given. We won't call it guidance since this is speculative, like you just mentioned. But yes, that 50 to 60% growth number we're hoping to see for FY27. Mr. Bharuka, thank you so much for your time, and thanks for being so candid about the company's growth outlook. Thank you so much.
Thank you, Sneh. Thank you, Ashisha. Thank you. Thanks a lot.
On a programming note, for 17 years, ET Now has empowered investors and decision makers with the insights needed to navigate India's growth story. Continuing that commitment, we bring you the ET Now Market Summit 2026, a gathering of India's leading economists, fund managers, policymakers, and investment experts, including the likes of Mr. Sunil Singhania, Sandeep Tandon, Sandeep Sikka, Ridham Desai, and Vijay Kedia. They will be coming together to decode the future of Indian markets, a special event where SEBI Chairman Tuhin Kanta Pandey will be the chief guest and share his insights on navigating volatility. Stay tuned to ET Now on 12th June for exclusive insights and powerful conversations from the ET Now Market Summit 2026.